Hello traders, welcome to a new trading day. My name is Somi Adeagbo, market analyst at Greenwave Exchange. So today is Friday, 3rd June 2022, is the last day of the week, and it looks like the market has returned to the way it started at the beginning of the week, which is on a risk on sentiment. So for the majority of the week, we saw a minor correction on risk off had a little correction. So before we add that very massive push up in stocks and other risk on assets on Thursday. So today we're looking forward to the NFP figures, and it looks like the market is anticipating a weaker figure, a weaker job figures than we had in the previous month. So market is looking at 3.5% unemployment rate from 3.6% in the previous month, and of course the NFP figure coming down to around 25k, and so that's just the way the market is moving even before the event. Okay, which means that if the report comes out bad for the dollar, whether the unemployment rate drops to 3.5% or lower, or the NFP is weaker than expected, that we're going to see the dollar fall very more drastically, because one, yes, the figure does not support it, and then two, it will support the market's perception that the Fed will start will pause, okay, from the policy tightening that we have seen in much of this year so far. So there's going to be a kind of pause from July, from September. So that will most likely add to that, because if unemployment figure is getting worse, so there's no point increasing rates when the GDP is also not doing good. So that will most likely drive the price, everything to the economy to recession, stagflation, and stuff like that. So the two mandates of the central bank is to keep the inflation rate at a certain level, while also maintain maximum employment. So if those two are not really doing well at the same time, definitely the bank will have to wait a bit, okay, in the way they continue to tighten aggressively. So that's going to make the dollar to drop sharply further, very much sharply. Or if the on the other hand, if the figure comes out better than expected, which I really doubt, if it comes out better than expected, much better than expected, we're going to see a little bit of bounce on the dollar, but I don't think that will be really strong enough to change the market's perception. Right, I don't think it's going to be strong enough to change the market perception, and so after a minor bounce on the dollar, they'll most likely see further decline, but the decline won't be as fast and as volatile as when the print is not good for the dollar. Okay, and so on my screen is what I have on my screen is the volatility index, which has dropped into this zone here and just about breaking. Okay, even if I adjust this a bit, so it looks like the index has broken below this minor zone, and it's now look like the VIX is coming down right here, okay, which is a bullish sign for the S&P 500. So we've been looking at this VIX for some time now, looking at this top here, and so when it got here around that if in May, was just suggesting that the stock market might actually be oversold rather, and there's going to be a bounce, and that was exactly what happened for most of for the large part of last week. All right, and so on Monday we anticipated further rallies after a dip. So the dip happened on the S&P 500. So from here we're starting to see a bullish impulse wave rally on S&P 500 after we confirmed a bottom here, although it's still really very early to say that this is going to lead to a total recovery, but this is a good sign with this 5-wave move up here, because from here now I think price should still rally to 4250, 4300, and even 4350, where we have the next supply zone. Okay, so that's the next move that I'm anticipating. So if the price gets here to complete this impulse wave, if we're able to get some kind of rejection at this supply level, then ultimately a 3-wave correction could happen to 4100. okay, before the price now push. So it's now what happened around here that's going to determine how strong this this correction, I mean this bullish move, the resurgence, how fast it's going to be, how long it's going to last. Okay, if after this fifth wave we get a clean corrective pattern and price response upwards in an impulsive manner, then I think we should be able to see the S&P 500 grow to 4,600, 4,700 at least. Okay, but if the price after completing the impulse responds with a very sharp impulse move below 4,100, then I think there may just be another false resurgence and the S&P 500 is going to go downward. So we're just still going to watch, I mean read the news and see what is happening with macroeconomics, geopolitics and all that. And so the dollar index is definitely moving down, just like with the way we anticipated it. And after price make this move downwards, we actually look forward to a bounce like this, a corrective bounce for the fourth wave to around 102 to 102.5. So that was the suggested level on Monday, and price did respond just exactly the way we expected it to be, and so this should lead to further decline, especially if the data today from the NFP is now comes out good, or comes out as the way the market expects. So we're going to see further decline. All right, but if the data comes out good, I mean better, much better, I think we're most likely going to see another move like this before the decline, or in a more in the worst case scenario for the bears, I think maybe further move to this key supply zone might happen, okay, before the price then drop. But generally I still think that the dollar is bearish, and the next level to look forward to is 100.5 and 100 in the short term. So likewise, euro US dollar, it's moving upward just as we expected as well. So we're looking at price being rejected as this supply zone as we started to see this impulse move. And so afterwards we looked at a three-wave dip for euro dollar, pound dollar, Aussie dollar, New Zealand dollar, like buying the dip kind of situation on Monday, and that was exactly what happened. Okay, price came here around 106 1.0650, just below hit, but way above our 1.06 psychological level, and then price has not broken upwards. Okay, so we're waiting for the NFP, depends on what we get there. So I think we should be able to see further rallies up to this next one. I think price is going to crush this supply zone and then head toward this one here around the 1.09 1.0850 in the short term. Okay, so the dollar yen is really picked up, broke above this. We looked at this supply zone on Monday. We actually said that price was going to get there, but we are going to make the next decision when price gets here, because we want to see whether it's going to be a break above here to give us an impulsive run, or it's going to, this place is going to act as a kind of barrier for further upward push, and we're going to see a sharp downward move. If that happens, if the latter happens, so that means we're looking at the ABC kind of move, like more complex correction downwards. But with this break, it's now very clear that we're having an impulsive move. The yen is still the weakest safe haven so far. We are currently in a risk on sentiment, and now it's Japanese yen is actually much more weaker than the dollar. So we're anticipating further rallies on this one. So price might actually make some correction right here and then push up, but depending on what happened with the dollar today, so if we have a better figure than expected, I think the best currency pair, the best major pair to trade is going to be US dollar, Japanese yen. So because that is going to actually push it much higher, because the JPY is already weak. So any good data coming from the USD is definitely going to increase that kind of strength over the yen. Yeah, so going to see further rallies if the data comes out pretty nicely. But if the data does not come out well, then that means the euro dollar, the pound dollar, the Aussie dollar, those are the best pairs to trade, which now means that one should be looking forward to buying those ones. Okay, because the yen is still very weak. So if you get a bad figure today, we might actually see further decline back to this place around here, which is just above 128.5. all right, depending on how the market respond to that. Okay, so but generally it's looking very clear that the dollar yen is still bullish. The dollar CHF is kind of struggling right here. We're anticipating a three-wave bounce to these zones, but that's not happening. And with the dollar going back to its normal weak self that we have seen since late May, it looks like this correction is just part of this impulse move, and we're going to see further dip maybe to at this level here around 0.9350. okay, before we now will now start looking at this bounce. All right, yeah, okay, let me do it better. All right, price breaking below this already, and if the dollar comes out weak today, then I think we're just going to see the dollar CHF continue to go down and down. The next key zone is going to be around 0.94, 0.935, and I think it can actually get there before it gets an opportunity for a bounce. All right, so that's my expectation for the dollar CHF, and actually it's the one I have the least confidence for because the way it's moving. So so that's it for the dollar CHF. For the pound dollar also moved just exactly the way we expected, but price didn't really touch here. So we had this ABC move completed here, and we're looking forward to a bullish opportunity. That's buy the dip. All right, so the dip happened around here and it pushed up, so which is an indication that the X move has ended here. All right, we're actually looking at it ending here. So but with this big push here, it shows that it has ended here. And so that's going to be an opportunity to look forward to more rallies, more buys, at least back to the zone, and ultimately here 1.275, 1.30. I think the pound dollar could actually get there, especially with the way if the dollar continues to weaken as expected. And then the New Zealand US dollar is also the same thing. Yeah, we looked for a dip also, and prices responding, meaning that this bullish recovery is still very much intact, and we're going to see a break above this supply zone. We got a very nice reaction, but not really too deep, which that's why I counted it as the fourth wave. And so with this impulsive drive, it's really very clear that we're going to see more move up, maybe to 0.67 for the New Zealand US dollar. And for the Aussie dollar, the same thing. Yeah, the same thing there. So price is giving us this wedge, but I think we're going to definitely most likely see a breach of this level here. Okay, so further rallies up to 0.735, 0.74. okay, maybe to the next key level around here, which is going to be around 74.50 or thereabout. So that's the next target for the Aussie dollar. And for the USD CAD, we're looking at this support. Okay, this demand zone here, and price eventually broke below it, which means that we can still see further decline down to this place. And maybe later we have to just change this from an ABC outlook to maybe an impulse move outlook, and then adjust adjust the reading, the wave count and all that. So with the dollar still expected to fall further, I think we should see further decline here. All right, so if the dollar comes out shocking with some with a very, very good print today, we might see a rally, but this is the next mini supply zone. I think it should be able to contain whatever rally we see from there, if it's not really a spiky one, right? So if it's a normal one, this is the 4-hour time frame, might just see some move to 1.2650, and then that might present another bearish opportunity to take things down to 1.25 psychological level, or maybe below it, where we have a demand zone rather. So for gold moved just the way we expected as well. So I looked at two major scenarios with the price making this move here and going all sluggish. I said we might actually see a move like this before a push up, or or we might see a triangle move instead and price pushes up. So the former happened, price came right here and got a very nice support here and then push up. So that's a very good very good one there. And it looks like we're going to see further rallies to 1900, okay, around this the supply zone. Okay, most likely we're going to see that. And for bitcoin moved very well, also moved to 32 to 34k, which was the reversal zone I was looking at. And but before we could confirm the end of this photo, we need to see a sharp move downward, and that was what we got. This is a kind of v-shaped move downwards, and so we can then start counting another impulsive like this down. So it looks very bearish, really looks very bearish, very bearish. So we're currently getting this second this correction here. All right, and at the end of this, I won't be surprised if we see another sharp move to break below 25,000 down to 23,000 bearish target level. So most likely that's what we're going to see. So the US oil still, I mean, responded just the way we expected. We're looking at this wedge pattern, so we saw this sharp response, cool, but the follow through wasn't really good enough after the OPEC meeting yesterday. So the OPEC has agreed to increase supplies, okay, because the EU is definitely ready to start reducing, okay, the amount of oil and gas that they purchase from Russia, onto a point whereby they will be totally independent of Russian oil and gas. So with that, OPEC has made a call to increase supplies and all of that. So the first reaction from the market meant that, of course, the hike in supply might not really come immediately. So this sharp move up here just shows that market just read a kind of confirmation, because we've been hearing it for some time that the EU, the European community, European countries want to go out of Russia in terms of the oil and gas business purchasing and all that. So they want to go out of the Russian deal. So definitely within that main time, there is going to be higher prices. So definitely, so I think this is going to be a kind of temporary surge. This is a kind of temporary surge, which is a reaction of a near-term hike in prices in gas and in oil and all that. And so at the end of this, once we start seeing, I think the market is going to start reacting bearishly to this, okay, because this is still very much within a wedge structure. So it gradually, not really impulsive, moves more like corrective. You can see a lot of overlapping, so kind of wedge at the top. It still looks like the oil prices is very much vulnerable to the downside, technically at least, until we see a break above here. All right, so that's just what I think about. I think the market will still definitely start reacting to all those new pumps, to support the shock that the world has gotten so far from the Russian invasion and all that. So that's it from me today. Thank you very much for watching this. I'm going to see you in the next one. Bye.